Hi everyone, welcome to another Weekly Forex Forecast for the week ending December 18th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the dollar versus the yen, as well as the pound versus the New Zealand dollar. And we're going to wrap things up with gold or XAUUSD. The EURUSD continues to consolidate, the pound versus the New Zealand dollar has been a great short so far, and the dollar yen looks to be on the verge of a big breakout. So we'll get to all of that and more in today's video, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first we have the EURUSD, and the pair spent last week consolidating following this breakout above 120. So this is something we've talked about for a long time now, where we had the sideways consolidation back here for about 4 months between 116.15 and that 120 area. Now you can see where on December 1st, we did break out from 120 and came up to retest that 121.50/60 area. So this was resistance last week. And going forward, I like the idea of 120.70 serving as support. Now it is going to take a breakout from this range in order to figure out where the EURUSD wants to go from here. So if you saw last week's commentary, you also know about this intraday flag pattern that was developing. However, buyers failed to hold the pair above it. All right, so we had this flag pattern that was developing here on the 4-hour time frame. And I had some people asking me, because the EURUSD broke down and closed back below this pattern, are you now bearish the EURUSD? And my answer is no, because I always knew about this 121.50/60 area. In fact, even last week I talked about this, that even though we saw the pair break out from this bullish flag pattern, this 121.50/60 area was still intact, and that we needed to see the pair close the day above this area to confirm the breakout. And furthermore, I'm not going to use a 4-hour pattern over what's happening on the daily chart. And as far as the daily chart's concerned, the pair is still in an uptrend. We're still holding above 120, which was the previous range top. And the price action here still looks constructive. Could we come back and retest 120.70? Absolutely. Could we break below that and come back to retest 120 as support? Absolutely. Those are both scenarios that I'm keeping an eye on. It's all going to depend on how the pair reacts to 120.70 next week. If it is retested as support, again, a daily close below that would open up 120. So I remain long here from this Friday candle. I was buying before this breakout because, as I told members, the fact that the New Zealand dollar was forming a very similar sideways action here on its daily time frame and actually broke out weeks ahead of the EURUSD and even Australian dollar. I talked about that last week, how the New Zealand dollar was actually front running these two currency pairs by about 2 to 3 weeks. So for the week ahead, 120.70 is going to be support with a break below that, exposing 120. If the pair can get above this 121.60 area on a daily closing basis, look for a move up into that 123.30 area. And as long as this uptrend continues and the pair remains constructive, my target going into 2021 remains that 125 area. You can see how that was the top from back here in 2017. All right, so going forward again, 121.60 is going to be resistance. A close above that exposes 123.30, followed by 125. Alternatively, don't rule out the possibility of a move below 120.70 to retest 120, which was the top of that previous range. So far, this breakout on the pound has been pretty disappointing. I've been talking about this for a while now, where on the higher time frames we have this multi-year falling wedge pattern, and the pair has yet to confirm a monthly close above it. So I want to point that out first. This is something I've mentioned a few times recently, where even though we have had a daily and weekly close above this wedge top, we need a monthly close because this level goes back to 2007, and a level this significant is not going to break with a daily close above it. We need to see a month, either December, January, February, close above this area to confirm the breakout and flip that 133.80 area to support. Until that happens, this breakout is going to continue to be incredibly speculative. Now, looking at the daily time frame, you can see where Brexit skepticism last week caused the pair to close back below the top of that wedge pattern we just looked at. So you can see where the pair broke out from here on the daily time frame, it held above it for several weeks. However, Friday appears to have closed back below that area right around 133. So if the pair does hold above this area this week, we could see a retest of that May trend line right around 130.70. But again, you have to be really careful here because of the Brexit news over this weekend. That could cause volatility for the week ahead. In fact, it's almost guaranteed to. And furthermore, as I mentioned, the monthly time frame is really what's going to confirm the breakout. So until we get a monthly close above that 133.80 area, this region is going to remain resistance on a monthly closing basis. So we'll see what happens for the rest of the month. We could get a move lower from the pound before we finally break out here. But as I've mentioned for a while, I do like the pound higher going into 2021. If for nothing else, this falling wedge pattern, along with what could be a bottoming formation in the form of an inverse head and shoulders. So if we do get a monthly close above 133.80, that could send the pair higher up to some of these recent highs from 2017. So we'll see how this plays out. We could see some more weakness from the pound, but just be careful trying to trade this pair given the Brexit volatility that we're sure to see over the next few days and weeks. I could be wrong, but the dollar yen looks to be coiling for a big move. Over the last few weeks, we've seen volatility really decline, and the pair continues to make these lower highs all year. So ever since February, the pair has been carving lower highs here on the daily time frame. And as I mentioned to members recently, it's going to take a move above one of these recent highs for me to flip my bias. So all year I've been looking for short opportunities simply because the pair is carving these lower highs. Now, if it were to come up and take out some of these highs around 106, that could be an indication that the pair is going to turn higher. But as long as it's forming these lower highs, I like the idea of looking for short opportunities from the dollar yen. So as I mentioned last week, we have a long-term trend line that extends from some of these 2012 lows and connects with that March low. So if the pair does close a week below this area right around 103.70, that could send the pair much lower, perhaps down toward the 101 area, maybe as low as 100. So looking at the higher time frames, you can see where this area between 100 and 101 has been support over the last decade. Notice how back here it was support again through here, and also resistance on a few occasions back here in 2013. But it is going to take a weekly close below the 103.70 area. Until that happens, this region is going to be support. So we'll see how this plays out. But either way, again, on the daily time frame, I do think that the pair is coiling for a big move just based on the way that volatility has trailed off recently over the last few weeks. And the pair is working its way into this wedge pattern that does hint at a break higher or lower over the coming weeks. And just based on the higher time frames combined with these lower highs all year, if I had to guess, I would say that that break is going to be lower rather than higher. I've been discussing this short opportunity on the pound versus the New Zealand dollar for weeks. In fact, I was first talking about it back here in October when the pair formed this bearish pin bar here on the weekly time frame. So the combination of this pin bar and these lower highs ever since earlier in the year, I thought that a breakdown was likely. I wrote about that on the blog, and I was also getting short through this area. Now I'm still short today, and I have added to it twice following this breakdown from this multi-year ascending channel. So the last 2 weeks, we've looked at how the pair broke below this 190 area. So this region right through here, 190, was support for several months. The pair broke below it and retested that area between 190 and 191.50. So I was adding to that position through this area. And just last week, I mentioned how on the daily time frame, the pair had broken below 188.90. So you can see here on the daily how 188.90 served as support for several weeks. The pair broke below it last week, which meant that 188.90 had flipped to resistance. Now, another level that I mentioned to members, and I also wrote this in the blog, I said that 186.20 could also be support on the way down. And sure enough, it looks like Friday bounced from that area and closed above it. Now, this is not a bullish pin bar, at least not according to me. However, we could see a bounce given that we are holding above that 86.20 support area. But again, 188.90, I'd like to see this area serve as resistance and hold as resistance on a daily closing basis. Alternatively, if we see a close below 186.20, that could present a short opportunity or an opportunity to add to an existing position. And my final target here remains that 182.80 area. You can see how 182.80 was support back through here. So for the week ahead, 186.20 is going to be support, 188.90 is resistance. If the pair can get below 186.20 on a daily closing basis, we could finally see a run at 182.80, which is my target for my short trade. Gold, or XAUUSD, started out last week on a bullish note. It closed above this 1850 area, which, as I had mentioned recently, was resistance. You can see where it was resistance on this candle last Friday, and then Monday closed above it. Tuesday held that area. However, by Wednesday, we had this massive sell-off and we closed back below 1850. So going forward, the direction for gold is unclear. We could see a move lower in another retest of this 1790 area before gold finally breaks out from this consolidation. And something I've been talking about to members for a while now, in fact, all the way back to April and May, is that I do expect cryptocurrencies to outpace gold. I think that cryptocurrencies like Bitcoin and Ethereum are not only going to outpace gold, but they've also taken away from some of the metal's luster. Just looking at the outflows from gold and the inflows into Bitcoin, it does appear that a lot of traditional gold investors are actually choosing Bitcoin over the next year because of the asymmetry it provides. So I'm not saying that gold is dead. I'm not saying that it's not going to rally, because I think it will into 2021, but I do expect Bitcoin to do much, much better than gold by the end of 2021. So I was buying Bitcoin below $7,000 earlier this year. I was buying Ethereum just over $200. And in fact, I'm still buying Ethereum because I still think it's a bargain. So again, I do think that cryptocurrencies will outpace gold, but I do think that XAUUSD has a chance in 2021 to break higher, just given the fact that this uptrend has been in place for several years. We've seen this consolidation in the form of what could be a bull flag. So if gold can finally get its act together and take out this $1,900 area, we could see a run at not only 2015 and 2075, but the measured objective, if I use this March low as the start of a flagpole, the measured objective for this pattern comes in right around 2380, so $2,380. That would be the measured objective of this bull flag pattern, but it depends on two things. One, this low down here has to hold, and two, the pair has to break out from that $1,900 area to confirm the breakout from this bullish flag. Until that occurs, expect gold to continue the sideways consolidation and to remain indecisive. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.